Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look once again on the gold market. So as usual, we have prepared the report today where we have taken a look at some specific issue for the gold, in particular speaking recent Gold Council report on the demand and global demand on the gold market. A few specific issues that had a relation to the gold performance. So, as usual, we have made the conclusion on the recent information that we've got based on this data. Speaking about the performance of the gold, yes, maybe it is not as impressive, but actually, if you just take into consideration what has happened in the recent few months, what the data we've got two extremely successful gross domestic product reports. We've got two reports of the payrolls about 300,000, and even these kind of the reports dropping on inflation, by the way, and all this report were not able to really crush the gold. So gold resists to all this well, at least theoretically positive data very well. Just compare what's going on the gold and the euro currency. So euro already has dropped below the euro pivot point and has shown big drop recently on the background of the payrolls report, but we do not see it on the gold. So yes, gold has shown the pullback, but this pullback was actually in a row with our bullish scenario. It hasn't broken any significant levels. Gold right now stands above the yearly pivot point. So despite that, this massive sell-off happening from the gold ETF, gold price is not dropping. So the really big divergence of the performance of the gold ETFs and the gold price. It seems that nobody believes more in a paper gold. So we think that signs of the bullishness of the market in a long-term perspective. Now let's go back to the practical issue. So by taking a look at the current performance and on the charts, the one major thing that we need to consider is the performance on the weekly chart. You will not see it on retail broker charts. At least I have the FX choice, and on my chart I do not have it. But if you take a look at the futures on the gold market on the Chicago Mercantile Exchange, you will see that on the weekly chart we've got the opposite grabber. So now we have two grabbers in opposite direction. First one stands to the upside, which is actually the pattern that we have used on the last week for trading. This actually has become the core of our context. We have traded long gold just because of this pattern. And now, in performance of this week, you can see that we have the opposite one. So that makes overall situation very tricky. In what direction to trade? Actually, this might become just a byproduct of the payrolls report, but still we have to be cautious on this and take it into consideration. On the daily chart, it's not many things to comment. Recent performance on Friday was inside session, so actually stands in the range of the Thursday. Trend remains bullish on the daily, but overall price action is not really fast. Bullish pattern is still valid, but as I said, I mean grabber. But as I said, with the appearing of another one, it's an opposite direction. We do not have as obvious reasons to go long as we had in the beginning of the last week. So it seems that bears could sell, bulls could buy, because we have two patterns in opposite direction. But by our view, and for the truth's sake, we suggest that it would be better to stick with the head and shoulders pattern that we discussed. Because this pattern, by our opinion, might be used as for trading purposes as indicator of the further direction. Because if actually we're correct that the bearish grabber has appeared just a byproduct of the payrolls volatility, it should be erased. It should fail. This could happen in turn if gold market will not break down 2020 area, if it will stay above an area of the 2020, 2030 where it stands. This is, by the way, retracement that we discussed on Friday. We said if on the payrolls we will get the downside retracement somewhere into the 618 level, we could consider taking a long position. But at that moment, we haven't got any bearish grabber on the weekly chart. Now situation stands a bit different. If in turn market will start breaking this area, returning back to the lows, it will mean that, and it starts smelling like the actually failure of these hand and shoulders, which suggests drop below the lows, and it will mean that the bearish grabber starts working. So taking it all together, we suggest that the best choice right now is starting to monitor the performance of the market around this area on Monday and see what will happen, what patterns will be formed there, what the actual performance market will show here. So that's our view currently on the gold market. Appearing of some minor bullish patterns around this level led us to consider taking the long position, very small stops, and see how market will react on these patterns, whether it will be able to return back to the neckline, or it will be very small reactions. Market will consistently will start dropping back to the lows once and once again. So it will be just in one word, easily speaking, we just need to see what will happen. In other words, whether we'll see real power of the gold around this level or we will not see it. So that's what we intend to do, at least on Monday, and then we will see whether it makes sense to take some position or not.